Hello friends, I am going to discuss illustration number 1 of CMA final SFM capital budgeting. This is one of the biggest questions and one of the most important questions. Please read these questions here. In the given question, it is written illustration 1. A large profit making company is considering the installation of the machine to process the waste produced by one of its existing manufacturing process to be converted into the marketable product. At present, the waste is removed by the contractor or disposal by the company is rupees 50 lakh per annum. This is the cost of disposal of waste. Cost of disposal of waste. Okay, this is the cost of disposal of waste per annum. The next 4 years and the current can be terminated. The contract can be terminated upon the installation of the aforesaid machine. Payment of commission of rupees 30 lakh before the processing operation per. Okay, this is the cost. This is the cost. What is the cost? If you are going to terminate the contract, in this case you will have to pay compensation. You will have to pay compensation 30 lakh. You will have to pay compensation 30 lakh. And when for the purpose of installing machine and producing goods of the from the waste, processing operation start. This compensation is not allowed as deduction for the tax purposes. This not allowed for deduction for the tax purposes. The machine required for carrying out the processing will cost rupees 200 lakh. This is the cost of the machine, 200 lakh, to be financed by the loan repayable in a 4 equal installment commencing from the end of the first year. The interest rate of the loan is 16% per annum. At the end of the fourth year, the machine can be sold rupees 20 lakh. Machine can be sold rupees 20 lakh, and the dismantling and removal will be cost rupees 15 lakh. It means what? If you are going to sell the machine in 20 lakh and your removal cost is 15 lakh, you will have to pay the net. Your realization is rupees 5 lakh only. Rupees 5 lakh only. Okay, at the end of the fourth year. The sale and the direct cost and information are given there. Sale information is given, material consumption, wages, other factory, these informations are given. This is factory overhead. Factory overhead 55 days. Factory overhead, in the case of factory overhead, allocated factory overhead are not considered in a capital budgeting. I have already discussed these points in a class, but what informations are given further here? Initial stock the material is required commencing the processing company. This is the stock of material you require 20 lakh at the start of the 1 year, 0 year, and the stock level of material will be maintaining year 1, 2, 3 will be 55 lakh. It means initially you have to invest in material costing, you have to stock in material costing 20 lakh, and each and every moment you should have 55 lakh. It means additional 35 lakh material you have to introduce in the second year, because of these are going to be maintained. Level of the stock maintaining at the end of the year 1, 2, 3. This is a 0 year, and this is the first year 1, 2, 3, 55 lakh, 30 lakh. It means 35 lakh you have to introduce the further material stock, and the stock at the end of the 4 will be nil. Stock of the end of the 4th will be nil. This means material you have already used. The storage of the material will be utilized as space which would otherwise have the rented out of rupees 10 lakh. You have stored the raw material which is used, storage the raw material, and storage cost rupees 10 lakh can be assumed because of one space you had. That space you had let out for rupees 10 lakh, but on manufacturing of the product from the disposal material, you will have to utilize such a space for storing the material. That's why you have foregone, you have loss of rupees 10 lakh. This is opportunity cost for the storage of raw material, 10 lakh per annum. Labor cost include the wages of rupees 40 workers which transfer to this process will be reduced. Ideal time cost this 15 lakh in year 1 and 10 lakh in year 2. This is a labor cost. Saving in labor cost 50 lakh in year 1 and 15 lakh in year 2 and 10 lakh in year 2. Why? Because of these laborers was working other sites, and that side there was ideal time, and due to which you have to paid for the ideal time rupees 15 lakh for the first year and 10 lakh for the second year. Okay, for that you have to this amount saved due to transferring the labor from there. No ideal time in this case. Factory overhead includes apportionment of the general factory overheads. Apportionment of general factory overhead except the extent of insurance charges rupees 30 lakh per annum payable on the ventures. The tax rate 35%. It means in the place of the factory overhead you have to charge only 30 lakh, because of allocation of factory overhead is not considered for a part of the decision making tools in a capital budgeting. But in this case insurance charges you will have to pay, and the factory overhead include insurance charges here, and out of the whole factory overhead only you have to take insurance charges, because allocation of factory overhead are removed. Okay, allocation of factory overhead are not considered for the decision making. Now these are present value factors. Now you have to evaluate the proposal whether it is better decision to manufacturing the product from disposal material or not. In this case I have already mentioned you have the 5 working notes. First working note you have to calculate present value of cash outflow. In second working note you have to calculate depreciation. In third working note you have to calculate operating cash inflow. Depreciation tax saving there must be. Operating cash inflow, operating cash inflow. In fourth you have to calculate terminal cash inflow, terminal cash inflow. In fifth you have to calculate net present value. If net present value is a positive, then accept the project, negative reject the project. You have to do. Okay, in the case you don't need to calculate tax benefit due to sale of old machine, because this is not the question of replacement, this is a question of expansion. Working note first I'm going to calculate here. Calculation of present value of cash outflow. This is the present value of cash outflow you have to calculate here. Present value of cash outflow. This is your amount. Present value factor. This is your present value. Look at here. Here material in stock. You can write here year as well. Material at a stock in 0 year 30 20 20. The present value for 0 year is this. This is 20 lakh. This is the amount in lakhs. This is the data in lakhs. Okay. Material in a stock in second year 35 lakh. Because of whole material you have to need to 55 lakh. And this is the for the 1 year end. 0.87. This is 30.45 material as to stock. Now compensation, you have to pay compensation. compensation due to due to contract removal of contract. Your what is the reason? That's contract installation. A forced machine payment of compensation 30 lakh for processing operation. Termination of contract due to termination of contract. What is the termination of contract? You had a contract with the other party to remove disposal material each and every year. For that, company was paying 50 lakh. But now company has decided to produce the product and the contract has terminated. In this case, you have to pay 30 lakh rupees here. And this is the without any tax. There is no any tax benefit of this cost. So that is the 0 year. That's why this is the 30 lakhs. Okay. Now we need to calculate loan installment. Repayment of loan. So what is the loan repayment? Loan in payment. You are going to pay the loan in 4 equal installments. So here loan payment, loan principal payment 1 to 4 year, 200 lakhs the loan in the 4 part, that equal to 50. And this is the because of you are going to pay in a 4 year, each and every year you are going to pay 50 lakh, 50 lakh, 50 lakh. The present value of this 4 year is 2.856. 2.856. So this is a 142.8. 142.8. Okay. 142.8. Now the question is, you are going to save the contract payment. In the first cases, what is the questions? You had to pay, in this case, please try to understand. You had to pay 50 lakh for the contract payment. Now, due to manufacturing the product by the disposal, this payment will save. The saving in contract less saving in contract termination. What is the saving? That is 50 lakh you was going to pay. Net of tax 0.35. This is the 0.35. Tax rate was this. This is 1 to 4 year. 1 to 4 year. So here 50 lakh into 0.65, that is 32.5 lakh. You had this is a saving. This is a 32.5 lakh. This is a saving for the 5 years. This is a saving for the 5 year, and this is 32.5, 92 point. This is 92.82. This is a 92.82. This is a saving. Why there is saving? Because of you are going to manufacturing the some product by the disposal goods. After manufacturing, you have not to pay to the contractor 50 lakh each year. Okay. Now the present value of cash outflow will be here, can be calculated as present value of cash outflow. This is rupees 130.43. 130.43. Okay. Now 130.43. Now we need to calculate interest. Working note second. Calculation of interest. Interest on loan. This is the year 1, 2, 3, 4. Interest 200 into 16%, that is 32 lakh outstanding loan. Out of 200 lakh, you are going to pay 50 lakh. So this is 150. 150 into 16%. This is 150 minus 50. That equal to 100 lakh. 100 lakh into 16%. Okay. 100 lakh into 16%. Out of 100, this is 50 you have already paid. That is 50 lakh. 50 lakh into 16%. Look at here. Why 50 minus 50 minus 50, that is the outstanding loan 0. In each year loan is going to paid by 50 lakh 50 lakh 50 lakh. Okay, and that I have calculated here. Loan payment here it is written, loan payment it is written here. Okay, this is 142. And saving of contract, what is the saving of contract? Saving of contract termination means you had to pay 50 lakh to the contractor for disposal of waste material, but now you are going to make the product from the disposal waste material. That's why contract is going to be terminated. After contract termination, you have not to pay, 50 lakh. That is just saving. Okay, now this is 32 lakh, this is 24 lakh, this is 16 lakh, this is 8 lakh. This is the interest of loan payment. Okay, now working note second, working note third, calculation of operating cash inflow. Operating cash inflow. Operating cash inflow. One, this is 2, 3, this is 4. Information is already given in the question sum, that is sales revenue. Sales revenue, you have A 322 418 418. Okay, less cost. Now material cost, 30, 40, 85, 85. Wages was 75, out of which 15 lakh saved due to the idle time. Wages was 75, out of 10 lakh saved in the second year. So that is the 60, 65, 85 wages. This is the 100. Now other expenses. These all informations are given here in the question. These are the informations here. I am going to write the other expenses here. 40, 45, 54, 70. 40, 45, 54, this is 70. Factory insurance, this is from factory overhead. Factory overhead. Overhead are allocation of overhead allocation of overhead is not considered for the decision making in a long term investments. But insurance is not a overhead. You have to pay that amount. You have to take 30 lakh, that is 30 lakh, 30 lakh, 30 lakh. Now interest already calculated here, 32, 24, 16, 8. Depreciation. Depreciation information is already given in the questions here. Depreciation as per the income tax act here, 50, 38, 28, 21. 50, 38, 28, that is 21. Now you can write a total cost in this case. Total cost, and this is assumed to be B. 252, 252, 308, 324. Now this is the total cost. Now earning before tax. Earning before tax, this is the A minus B. This is your 70, A minus B. 70, 70, 110. This is 94. Less tax. Tax you have 35%. 35% tax. This is the 45.24.5. 70 into 0.35. 24.5. This is 24.5. 38.5. 38.5. 32.9. Earning after tax. Earning after tax. Earning after tax 45.5. 83.5. 99.5. 82.5. 82.10. Add depreciation. Depreciation. This is your 50, 38, 28, 21. Now operating cash inflow. Operating cash inflow you have. Operating cash inflow, that is 95.5, 95.5, 83.5, 83.5, 90. Operating cash inflow. $70. After subtracting this, you will have 45.5. Look at it. This is the 45.5. This is after subtracting 71.5. 71.5. After subtracting 8, 61.10. 61.10. Now adding these 83.5, 99.5. This is 82.10. This is the operating cash inflow. Now present value factor at the rate of 20%, I think. This is a key given information in the question. 0.87, 0, 0.756, 756, 0.658, 658, 0.572, 0.572. Now this is a present value. Present value of operating cash inflow. Operating cash inflow 83.085, 085, 63.126, 63.126. Now 65.471, 65.471, 46.9612, 46.9612. Total present value of operating cash inflow. Total present value of operating cash inflow 83.085, 63.126, 65.471, 46.9612. That is 256.6432, 6432, 256.6432. Okay. Now we have to calculate terminal cash inflow. Calculation of terminal cash inflow. Terminal cash inflow. There is nothing in terminal. There is only one port sale of machine in 20 lakh. Out of 20 lakh, 5 lakh, out of 20 lakh, removal cost is 15 lakh. It means only one 5 lakh is a terminal. The terminal cash inflow is rupees 5 lakh into 0.572, 572 rupees 5 lakh into 0.572, 2.86 lakh. Now calculation of net present value. Net present value is present value of cash inflow minus present value of cash outflow. Then cash inflow is 258, 258 point cash inflow. Okay. Operating cash inflow, cash inflow 258.6432. Terminal cash inflow, cash inflow, terminal cash inflow is 2.86. Present value of cash inflow 261.5032. Present value of cash outflow, we have already calculated here 130.43, 130.43. Net present value, net present 261.5032 minus 130.43, 131.0732. This is your net present value. Since net present value is a positive, therefore we should accept the project. Okay. Okay. Thank you, class.